want your credit low. 2 major changes and the lender might say no. 3 more millions when you ask where the loans go. Hey, I'm my real estate baddies and bosses. Today I'm going to be teaching you about FHA loans and conventional loans. I'm also going to be comparing them so you can see the pros and cons of each loan type. For FHA, it's typically a first-time home buyer loan option. And with this loan option, the credit score minimum ranges from about 580 to the mid 600s. So what you can kind of expect if you have a score in the high 500 range to the mid 600 range, then you can get access to the first-time home buyer loan, and then you can also get access to first-time home buyer products. You have grants and different programs that are associated with it. This is a great product for someone who's still building their credit. They're still working on it. But just to reiterate, the FHA loan is a first-time home buyer type of loan. The minimum credit score varies from 580 to around mid 600s. I'm giving a range because they always change and they always vary. And the typical down payment is 3.5% of the sales price. And the cons are you're paying your mortgage insurance through the life of the loan. You may be getting the first-time home buyer program, so you get that down payment assistance. However, it increases your interest rate to use these government-backed programs. They also may delay the times of your settlement. Quicker closing process, then maybe you steer away from those first-time home buyer programs, but it's always good to explore your options. So conventional is more traditional. Whenever I talk about conventional loans, I always tell people to think about, I was in this business program and we always had to wear suits and literally like 2-piece suits and stockings. I imagine that room of like us looking like a sea of penguins. That's what conventional loan products look like. They're pretty much more traditional. They are more uniformed and buttoned up when it comes to loan types. So with this is private investors. So instead of it being backed by the government, it's backed by private investors. So typically with these loan types, it's less strict when it comes to lender required repairs. Conventional, I get this all the time that you need to do 20% down. Sometimes with conventional, you can do 0% down, you can do 3%, 5%, 10%, 20%. And the reason for this is because the higher your down payment, the lower your interest rate typically. And go into your mid 600s to your low 700s, and this is for people with a higher credit. They've already established their credit for a long period of time and they want to take advantage of these low interest rates. Pros to this is that once you get 20% down, you no longer have to pay that mortgage insurance that I was talking about. So essentially, if you put 20% down in the beginning, then you won't have to pay your mortgage insurance. So it's giving convenient, it's giving, I would definitely use that to put 3% down and have a lower interest rate. So it's really up to you. That I tend to notice is, and it's not really a con, it's just something that you should look out for, is when it comes to the appraisal, sometimes there are lender required repairs. The transaction cannot move forward until this lender required repair is fixed or replaced. So these are the things that you kind of want to look into when you have an FHA loan. Some things like termites would have in order for an FHA buyer to move forward with that transaction, and it might not pop up until the appraisal happens. So you have those lender required repairs that majority of the time you'll see a lot of investors, they do conventional because they can get past the repairs that need to happen or for FHA, or even like sometimes seasoning issues. So I'll talk about this in another video, but with seasoning issues, then an FHA buyer cannot go in and buy that. It only can be conventional cash, hard money, all that. So these are the things that FHA buyers miss out on because the seasoning issues put the FHA buyer in a hard spot because they are not able to buy that property. Like the FHA will not allow them to buy a property that has seasoning issues if it's within that 90-day period. Only about the most long-term, short-term, whatever your real estate goals are, definitely take that into consideration when you're speaking to your lender, speaking to your realtor, so that they can get the holistic profile, so they can provide you with the resources for you to be the most successful. All right, you guys have a great day, great rest of your day, and I want you guys to know if you're looking for a realtor in the DMV area, specifically Prince George's County in this Maryland area, I am a licensed Maryland agent, so feel free to hit me up in the comments below, like, comment, and subscribe, and I will see you guys later.